Hello and a warm welcome to Furniture Industry News. It's October 22nd, 2025, and we have a lot to cover today in what continues to be a complex and fascinating market. Let's dive right into the numbers to get a sense of the landscape. While we don't have the official U.S. Department of Commerce data to review just yet, we can turn to the National Retail Federation's Retail Monitor for some key insights. And what it shows is a bit of a mixed bag for our industry. Looking at furniture and home furnishing stores, sales in September actually dipped month over month, showing a decrease of 1.87%. However, when we zoom out and look at the year-over-year picture, there's a modest bit of good news, with sales up just over 0.5% at 0.56%. This suggests that while there might be some short-term softness, the annual trend is still holding on to some growth. It's also worth noting that this is happening within a broader context of a slight downturn in total retail sales, which were down 0.66% month over month across all sectors. So, the furniture sector is certainly not alone in navigating these choppy waters. But retail sales are only one part of the story. For a fuller picture, we always have to look at the housing market, which is a key driver for our industry. And here, the news is surprisingly optimistic. The National Association of Home Builders reports that builder confidence is actually on the rise. More than that, their expectations for future sales are positive, which is a great leading indicator. This suggests that those on the front lines of building new homes are feeling good about the months ahead. However, there's an interesting layer to this optimism. The report also notes that 38% of builders reported cutting prices. So, what does this tell us? It suggests that while builders are confident they can move inventory, they're also being very pragmatic and competitive on pricing to make it happen. This combination of rising confidence and strategic price cuts paints a nuanced picture of a housing market that is finding its footing, which could spell opportunity for furniture retailers down the line. Wow. From the big picture, let's drill down into how specific companies are performing. And a perfect example of this complex environment can be seen in the latest report from Flexsteel. The company posted some genuinely impressive numbers for its first quarter. Net sales saw a 6.2% rise, reaching $110.4 million. What's really remarkable is that this marks their 8th consecutive quarter of year-over-year growth. That's 2 full years of consistent upward momentum, which is no small feat in any market, let alone the current one. The good news doesn't stop at the top line either. The company's net income soared by an incredible 65%, climbing to $7.3 million. By any measure, these are strong results that point to a company executing its strategy effectively. However, despite these fantastic quarterly results, Flexsteel's leadership is signaling caution. CEO Derek Schmidt highlighted what he described as choppy consumer demand and fragile confidence in the marketplace. This commentary really bridges the gap between their strong performance and the broader economic uncertainty we discussed earlier. It shows that even a company on a winning streak is acutely aware of the potential headwinds. And speaking of headwinds, one of the biggest ones on the horizon is trade policy. Schmidt specifically mentioned the impending tariff increase on upholstered furniture. As it stands, that tariff is 25%, but on January 1st, 2026, it's set to jump to 30%. This is a significant increase that is widely expected to weigh down both consumer demand and company margins as we head into the new year. It's a critical issue the entire industry will be watching very closely. This pressure on margins and demand is leading many companies to reevaluate their operational footprints, and we're seeing some major strategic shifts as a result. A prominent example comes from the world of e-commerce, with Wayfair announcing plans to close its warehouse in Erlanger, Kentucky. This move will unfortunately result in the layoff of 215 workers. This isn't an isolated event. It follows the closure of their nearby Florence, Kentucky warehouse just last year. This pattern points to a clear strategy of operational consolidation and efficiency. The Erlanger closure won't be immediate. The company has stated it will be a phased process, beginning in January of 2026 and expected to be fully completed around September of that year. It's a move that reflects the broader trend of companies optimizing their logistics and supply chains in a challenging economic climate. While Wayfair is streamlining its physical assets, we're seeing another form of consolidation in the industry as well. Twinstar Home has just announced its acquisition of the ready-to-assemble furniture company Walker Edison, bringing it out of its Chapter 11 bankruptcy. This is a fascinating and strategic move. Walker Edison will now be integrated directly into Twinstar Home's operations. The real power in this acquisition lies in the combination of strengths from both companies. Twin Star Home brings its robust manufacturing capabilities to the table, while Walker Edison is known for its deep expertise in e-commerce. By merging these two sides of the business, production and digital sales, the newly combined entity aims to create a more powerful and vertically integrated operation. This is a great example of how challenges, like a bankruptcy, can create opportunities for strategic growth and synergy. But it's not all about consolidation. In fact, while some companies are streamlining, others are in full-on expansion mode, betting big on the future of brick-and-mortar retail. Nowhere is this more evident than with Rooms to Go. The company is embarking on a significant expansion, with plans to open 13 new stores. This is a major investment in physical retail that signals strong confidence in their model. Perhaps the most significant part of this plan is their first-ever entry into the Northern Virginia market. Breaking into a new competitive region like that is a bold move. This expansion doesn't come out of nowhere. It follows the company's successful acquisition of the Great American Home Store in Memphis, which likely provided both the capital and the confidence to pursue this next phase of growth. Of course, an expansion of this scale requires significant logistical support. To power its initial move into Virginia, Rooms to Go is also expanding its large distribution center in Dunn, North Carolina. This ensures they have the supply chain infrastructure in place to properly service the new stores from day one. The company also noted that there are eventual plans for a dedicated warehouse directly in Virginia, which would further solidify their commitment to the new region. And Rooms to Go isn't the only one making big moves in physical retail. Our House has also just made a major statement with the opening of a new showroom in Pasadena, California. This new Our House location is truly a flagship. At an impressive 38,600 square feet, it is the largest store the company has opened to date. This marks the company's 12th store in the crucial California market, deepening its presence on the West Coast. An opening of this scale is a clear indicator of the brand's strength and its belief in the power of an immersive, high-quality showroom experience. But Our House is also making sure its growth is tied to the local community. As part of the grand opening, the company partnered with a local nonprofit, Altadena Girls. Our House helped furnish the organization's very first dedicated space, turning a major corporate milestone into a meaningful moment of community outreach. It's a wonderful example of how retailers can build strong local ties as they expand their national footprint. So, as we wrap up today's news, the picture of the industry is one of dynamic change. We're seeing mixed economic signals with cautious consumers and a pragmatic housing market. We see companies like FlexSteel posting strong results but bracing for future challenges like tariffs. And we see a fascinating divergence in strategy, with some like Wayfair consolidating operations, while others like Rooms to Go and Our House are betting big on physical expansion. It's an industry in motion, adapting to new realities and seeking out new opportunities. That's all the time we have for today. To make sure you never miss an update on the stories shaping our industry, be sure to subscribe to Furniture Industry News wherever you get your podcasts. Thanks for listening.